Hello, everyone. In this session, we're going to look at our question number 3 from Management Accounting, Budgeting AQA 16. This is Practice Assessment 1 from AATO website. And we are looking at the question for 20 marks. This is one of the very important and very common question in the exam. So let's have a look. First, we're going to read the question. And after that, we'll look at the requirement before we start answering the question. So we can see here on the left-hand side, we have some information. And on the right-hand side, we have a table to complete. Some information is already completed. For example, the opening inventory is already given. The closing inventory is already given. The fixed overhead already given. Selling price per unit is already given. Opening inventory value is already given. So few information is already given. Also, we have some overhead for the admin and marketing. This is also provided. Now, some information will be missing, and we have to find it out by using some technique. And also, this additional information will help us to find that information. So let's read this additional information we have. Complete the 3 working schedule using the information from production budget and notes below. Enter all figure as positive. That means if we have even the closing inventory, that normally is a negative figure we take away, but still we're going to show positive because the question says positive. All right, the production budget, we have opening inventory of finished good, 26,200 unit. Production, 348,000. Then subtotal sales, 340,000 unit. And the closing inventory of finished good, 34,200 unit. Material, we have each unit produced requires 7 kilogram of material. So to make 1 unit, we need 0.7 kilogram material. Closing inventory will be valued at the budgeted price per kg. So the closing inventory we have, that is 7,400. The way we're going to do the value, we're going to use the budgeted price per kilo. And the budgeted price per kilo, we can see here, is 1.45. The labor, it says each item takes 5 minutes to produce. So we need to see how many minutes. After that, we have to multiply with 60, divide with 60 to convert into hours, because we are looking at the hour here. So from the minute, we have to come back to the hours. 164 is staff work, 160 basic hour each in the period. So out of total hours, we have a basic hour, that is 164 staff times by 160 basic hours. So that will tell us how many will be the basic hour. Overtime is paid at 40% above the basic hourly rate. So the overtime will be paid 40% extra or more than the basic rate. Then we have here production overhead. Variable overhead is recovered in total labor hour. So when you're going to use the production overhead, we're going to use the total labor hour that we have calculated here. All right, then number B says complete the operating budget. Income cost inventory as positive. Closing finished good inventory will be valued at the budgeted production unit cost per unit. So the way we're going to value the closing inventory based on the budgeted production cost per unit. So first we have to calculate it. How much is the budgeted cost per unit? Then we can multiply with the number of unit we have for the closing inventory. Then it will give us how much is the value for the closing inventory. All right, so this is the information we have. Now we're going to start our calculation. The first one we can see here, we have opening inventory, and that is already given. So purchase, we have 1.45 kilo, then subtotal, then how much we used in the production and the closing. Now remember, to find it out how many material I need to purchase, I need to do little workings. That is how many I already have. Obviously, like I don't need to buy that. So if I buy something, for example, how many kilo I need to buy, I need to make sure how many I already have. Now, 8,800 kilo I already have. So I will take away, I minus that. And also, I want to keep at the end of the period 7,400. So this will be the closing. So it will be added. So with the purchase, how many kilo I need to buy, I will minus the opening and will add the closing so that whatever I already have in the stock, that one will be take away. And anything I want to keep at the end of the period, I will add it that. So let's have a look. So the question said each unit need 7 kilogram. So that means I'm going to make 348,000 unit. So 348,000 unit I will make. And per unit I need 0.7 kilogram. So how many kilogram material we need? First have a look at this one. So 348,000 times by 0.7, and that gives me 243,600. So 243,600. So this one we have to purchase based on the plan. But the question is, you already have 8,800. So we said opening, we already have 8,800. So you're going to minus that. And we need to add some closing because at the end of the period, we want to see 7,400. We'll still have on the stock. So we said 7,400, we need to add. So this one is the total production. So first, let's write it down. So on the production, I need 24,36,00. So this is the one we need for the production. And for the purchase, how many you need to purchase? So we said minus 8,800 plus 7,400, and that gives me 24,2200. 24,2200. So 24. This is the purchase amount. So this amount of material we have to purchase. All right, now if we have this one, we can find the subtotal. If we just added these two, the opening and the purchase, that should be give us our subtotal. So 8,800 plus 24,2200, and that gives me 25,1,000. So 25,1,000. So our material kilo is calculated now, is completed. Now we're going to look at the values. Now the question said the purchase will be per kilo 1.45. So 1.45 per kilo. So for 24,2200 times 1.45, and that will give us 35,1190. And the subtotal is adding this to opening plus purchase, and that will give us 36,3510. Then we need to find how much is the used in the production. But before we get this information, we can see how much is the value for the closing inventory. The question said closing inventory will be valued at the budgeted price per kilo. So budgeted price per kilo is 1.45 per kilo. So we can say 7,400 times 1.45 per kilo. So 7,400 times 1.45 per kilo. That is 10,730. So 10,730. Now, if you just find the difference between these two, that will give us our used in the production. So 3510 minus 10,730, and that will tell us how much we used in the production. So you have to remember all this technique. So that is 35, 27, and 80. So our material box or table is completed. This one is more complicated, the materials one. So other labor and the production overhead is not that complicated. All right, the next one we have a labor. The question said basic hour is 15. So let's find it out how many labor hour we need. So we have a production of 348,000 unit, and per unit need 5 minutes. 5 minutes. And we have to divide by 60 to convert this one into hours. So 348,000 times by 5 divided by 60. So we need 29,000 hours. So total, we need 29,000 hours. So it's a total, we need 29,000 hours. And how much will be the values depends what is the overtime rate and what is the basic rate. Now, out of 29,000 hours, we have a basic, they said 164 and 160. So this is the basic. So let's do 164 times 160. So basic is 26,240. So that's the basic hour. That's the basic hour. And if this is the basic hour, then we have the next one, we have the overtime. The overtime, it says, like you can see here, is very clear. The overtime says like only we have the difference between these two. So the overtime will be here 29,000 minus 26,240. So 29,000. And that gives me 2760. 2760. So it's the overtime. All right, now we need to record this thing too first. So we have here out of 29,000, we have 26,240 is the basic, and overtime is 2760. The rate we have here, that is for the basic is 15 per hour. So times by 15. And the next one, it says 40% extra. So it's at 15 times 1.4. There's 40% extra. You can do 40% on 15 as well, same thing. So then you multiply with that. So 26,240 times 15. That gives me 3600. And this one gives me 15 times 1.4 times 2760. That gives me 57960. 57960. If I added the total of these two, 45,000 1560. All right, the production overhead, they said use the labor hour basis. So I'm going to use the labor hour. So I have total 29,000 labor hour. So 29,000 times by 2.60. That gives me 75,400. So 75,400. If I make a total of that, that will be 170. 60, 170060. That's it. So that's how we can complete the workings. Now we can complete our operating statement. So let's have a look. The operating statement we have. So the operating statement, we have to take all the information from the last three tables. All right, let's have a look. So the first one says the sales unit. So the sales unit we have here 340,000. So write it down. 340,000 sales unit. So 340,000 times by 3.95. That gives me 1343,000. So 1343,000. Then we have a material. Now we have to take the copy of all this thing. The material we have in production, how much was the value in material for the production? So 35,2780. This one is the value for the material. I can just copy it. Used in production because we're looking at the production now. Cost of production. Best. Labor, the total labor cost for 29,000 hour is 45. So just copy 45 1560. Then the overhead total 170060. That's it. Okay, now we have a closing. The question said the closing inventory will be closing finished good inventory will be value at the budgeted production cost per unit. So we need to look at how much is the budgeted production cost per unit. So how we do that? We need to add it these three first to find it out how much is the total here. And this will help us to find how much is the closing inventory value. So if we added these three, it will be 35,2780 plus 45,1560 plus 1,760. That gives me 97,4400. I have to use this one to find how much is the closing inventory value. Now, let's have a look. Wow, how many units we have produced? So we have produced 348,000. So we do 974400 divide 348,000 divide 348. That how many units we have produced? So that gives me 2.8. 2.8. So 2.8 multiply the closing inventory of finished good. That is 34,200. So this is my closing inventory. 34,200. Yeah. So I need to just multiply that and write it down. So times 34,200. And that gives me 95,760. So very careful with that. First, I need to identify how much is the production cost per unit. Then we multiply with that closing inventory. Don't put the minus for the closing inventory because the question said put everything or record everything as a positive figure. Now, cost of goods sold, we know how to do it. So opening inventory plus production less the closing. So 70,70740 plus 97 minus 95. That will give us the cost of sales. And that is 94. Cost of goods sold 94.93, add 0. Then you have a gross profit. Gross profit is very simple. Sales minus the cost of sales. So 134,300,000 minus 94,9380. That will give us the gross profit. And the gross profit is 39,3620. 39,3620. Then you have overhead. If we added this to overhead, 112,168, that will give us 280,000. And finally, if we minus this one from the gross profit, that will give us the net profit or operating profit. That is 113,620. And that's it for our operating statement. The next question we have for, I think, the cash flow forecast. So let's have a look at this one. All right, let's read this one. Cash flow forecast, we're looking at how much is the closing balance or overdraft we have. If there is a positive, it is a closing balance. If there's a negative, then it's a overdraft. And the opening balance, we can see start with overdraft because it's a negative. Complete the cash flow forecast using the budgeted data that you have calculated in part A and B of this task and the additional information below. Enter the receipt and payment as a positive figure. So don't put any minus. Everything will be positive. The sales receivables balance expected to decrease by 12,000. Okay. Material payable expected to increase by 4,000. All other payable are made in the year in which they are incurred. So other payable is just like you paid immediately. Production overhead included depreciation 25,000. Remember that depreciation is a non-cash item, and obviously because of the depreciation there is no cash goes out actually from the bank, so you have to ignore it because depreciation have no impact on the cash flow on the bank. Okay, so if there is a production, if there's a depreciation include in the production overhead, that means you have to take it out. All right, so let's have a look. How can we do that? The first to look at how much we receipt. So sales receipt, from the sales, how much we receipt. So if you go back, our sales was 1, 3, 4, and 3,000. Now the question is how much we receipt during this period. We have to find it out. The question said sales receivables expected to decrease by 12,000. So it will be decreased by 12,000. If it is a decrease, very careful with that. Now we have 1,343,000, and the question said it will be decreased by 12. Now remember, if it is decreased by 12, doesn't mean we'll receive less cash. Does it mean we'll receive more cash? So it means we'll receive more cash. Sales receivables means the credit customer. If the credit customer is a decrease, it is good for me because now they are paying more quick than before. Remember that if the payable is a decrease, it is not good for me. If the payable is increased because I take now more time to pay the payable. But if the sales receivables or trade receivables decrease, it is good for me because now I receive the money more quickly. If it is increased, it is not good for me because increase means they are taking now longer time to pay me. All right, so if we have a look here, so my sales was 143 here, 300,000, 140, 3,000, and we have to increase it by 12,000. Remember that, do not decrease. Even the question said decrease for the receivables. That means now the credit customer will pay me 12,000 more, and they will not hold it for long. So it will be decreased. That means I will have 12,000 now cash, not credit. So cash means I'm going to receive the money immediately. Cash flow forecast is all about how much cash come in, how much go in. That's it. So if I do that, so I need to add it with my sales figure. So sales figure, that is 1,343. 000 plus 12,000. So that will give me 1355000. Then the payment for the material, they say payable expected to increase. So it is increase. If it is increased, that means I take more time to pay to my supplier. And it is good for me because I hold the money with me more time. So I hold the cash. So my cash will be gone from me later date. So it will be increased. So whatever time I'm taking now, I'll take more. So if we look at the material, so let's have a look. How much is the material we have? So it will be, how much it will be in green by 4,000. Okay. Let's have a look. Where is the material we have for the purchase? And it will be increased by 4,000. All right. So we can see here, so material payable balance is expected to increase by 4,000 over the year. So right now, how much I'm paying, I'm going to pay 4,000 pounds less. So if we look at our purchase for the material, that is 35,1190. Now we are paying 35,1190. So we'll pay less 4,000 because the payable period will be increased. So that means I'm paying less, I'm paying after. So I'll say that will be 35,1190 minus 4,000. So my material will be 34,7190. Is good for me because the less cash I'm paying. The labor, they said all other payment are made in the year in which they're incurred. So this one have no impact for the labor. So how much labor we have, we need to pay the same amount. So 45,1560, 45,1560. And production overhead. They said inside of the production overhead, there's a 25,000 of the depreciation. So you need to look at how much is the production overhead. That is 1,760 minus 25,000. That is 145,060. So depreciation is a non-cash item. We have to take it out. Remember that. 45,060. Other overhead. Other overheads. We have here, the question gave it to us, other overhead 280,000. So we need to 280,000. And that's it. After that, we added all of this, my payment, and look at how much is the total payment. So this is 129,8810. So that's my total receipt, and that's my total payment. If we find the difference, so that will give us 48,190. So it's not overdraft. Our receipt is more than the payment. So very careful with this word increase or decrease. So if the receivables is a decrease, it is good for me. If the payable is increase, it's good for me because I'm paying less. And receivables decrease means we receive more money. So very careful with this word. This word can be confusing. So you need a proper practice for this question. This question is very, very common in the exam. All right, so this is our end of the question number 3. So hopefully on the next session, we're going to talk about our question number 4.